Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video for October 1st, 2024. What's this about? Well, Mideast geopolitical tensions really blew up today, no pun intended, unfortunately, with Iran shooting ballistic missiles at Israel. So what happened in there, though, is it doesn't really matter of how if they're missiles or not. It has to do with how markets perceive it. And as you see, you got that massive spike in crude oil here. That massive spike led to a sell-off in the SPX, as you see here. So we can take it even on a 15-minute chart. So you see the spike here, the sell-off here. The sell-off then in crude oil led to a small rally on the right in the S&P, and then crude oil rallied on the close, and sure enough, the S&P went down. So just keep in mind of what we're looking at in there, and what do you look at now? All about two things, in my opinion. Number one, definitely crude oil. Definitely the crude oil, and watching that in here. The other thing to watch, though, is what I've obsessed about, and I'll show it on Thinkorswim, is the Dow Jones Commodity Index. The Dow Jones Commodity Index trying to reclaim that 1020 level. I'm telling you right now, the Fed is not going to cut as much as you think if you have a 10% rally in commodities like you've had. If that continues, I think you're going to see the bond market have another leg down, not up. Now, why was it up today? It was up because of a flight to quality. But the second that crude oil sold off a bit, and the second that the ES rallied a bit, the bonds sold off 20 ticks. We're short TLT. Now, if this starts to calm down, but the commodities stay up, so geopolitical tensions calm down just a bit, but commodities stay up, I think you'll see this all the way back at the 124.16 level, and I think you'll see TLT break that little bear flag and get to the 98 level. We'll see. I mean, there's still a lot of moving parts with the geopolitical tensions. Now, that being said, there are some other things that could hurt TLT. Let me show you one of them that's sort of interesting. So, the perception, I'm not saying it's right or wrong, but the perception is that Trump wants to do a lot of tax cuts that are going to really explode the deficit. It's bad for bonds. So we warned about this yesterday, that if Vance won tonight, First Solar would go down because the perception that solar stocks will go down just like they went up when Harris won the last debate. If Vance wins the debate tonight, I think what you'll see is the bonds go down because there's a chance of a higher deficit. So we're short bonds anyway. But that's why I think First Solar had this huge sell-off, 17-point sell-off intraday, because people are worried. Remember, First Solar had this massive rally on the perception that Harris beat Trump in the last debate. I'm not going to say she beat him or not. I'm saying the perception. So the perception. And the perception over here, if Vance wins, this could go all the way back and fill that gap. Just keep that in mind. We'll be watching that carefully, real carefully. But I'm not saying that's going to happen. I don't care pro or con. I'm just worried, wondering about how markets perceive things. But that's the kind of stuff that can matter. You could back it up also with that bear flag yesterday. You rallied to test the bear flag. So what's this mean for the overall market? Well, I'll show you. The first thing to notice in here is this. What I've obsessed about for you. And that's the SPX on the left. Or let's say the S&P futures on the right. And the NASDAQ futures on the left. Those things, those circles. Now, like I said, the NASDAQ has been underperforming. If the NASDAQ can't get in gear, then I think the S&P is going to go to where the NASDAQ is. Number one, right here, right there. right in that area, right there. That big spike up. That's like this. Just keep that in mind. That's like 57.15. That's another 40 points on the S&P. What else are we going to watch? We're going to watch the gaps. So we're going to see the NDX on the left, and we're going to see the gap down here, all the way here, which is basically filled. But then you go and take the SPX on the right, and you realize it has not filled the gap. That would be down here. So that's about another 40 points. So we're going to be watching that carefully. Like I said, the markets, all they did today is they rallied near the close to resistance and then sold off. And basically the bounce trade. What I mean by a bounce trade is this. I'm going to clear all the drawings. So you had the breakdown. You had the breakdown right here, right in that zone. So there's your resistance up there. Then you had the support down here. You have the one support here. Then you have a gap. Just keep that in mind. That could happen. But the bounce trade ultra short term was this trade from there to there. From this area to that area. If that doesn't hold, you're talking about there. If that doesn't hold, you're talking about filling the gap. If that gap fills, then I think you'll see the SPX fill this gap all the way down here. That's another 50 points. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.